Solved problems. Depreciation table. Straight line method. Sum of years digits method. Double declining balance method. 150% declining balance method. Problem. Danny Baldovino Company purchased a machinery on January 1, 2016. The following information regarding this asset and its acquisition is available. Cost 3,300,000. Residual value 300,000. Estimated useful life 5 years. Required. Prepare the depreciation table under the following methods. 1. Straight line method. 2. Straight line method and assume that the date of acquisition is April 1, 2016. 3. Sum of years digits. 4. Double declining balance method. 5. 150% declining balance method. Solution. Details amount. Cost 3,300,000. Residual value 300,000. Cost base 3 million. Estimated life 5 years. 1. Depreciation table under straight line method. Name of asset. Year 2016, 2017, 2018, 2019, 2020. Machinery cost 3,300,000. Machinery residual value 300,000. Net cost 3 million. Depreciation for the first year 20% of 3 million 600,000. Balance cost 2.4 million. Next year beginning balance of the cost 2,400,000 less depreciation 600,000. Net cost 1.8 million. 2018 beginning balance 1.8 million less depreciation 600,000. Net cost at the end of the year 1.2 million. 2019 at the beginning of the year 1.2 million less 600,000. Net book value 600,000. 2020 beginning balance 600,000. Depreciation 600,000. Net cost 0. 2. Depreciation table for straight line method. Assuming that the date of acquisition is April 1, 2016. Name of asset 2016 for 9 months, 2017 full year, 2018, 2019, 2020 and 2021. Machinery cost 3.3 million. Machinery residual value 300,000. Net cost 3 million. So depreciation at the rate of 20% on 3 million for 9 months is 450,000. Net balance cost is equal to 2,550,000. 2017 2,550,000 less depreciation 600,000. Net cost 1,950,000. 2018 beginning balance 1,950,000 less depreciation 600,000. Net cost balance cost 1,350,000. 2019 beginning balance 1,350,000 less depreciation 600,000. Balance cost 750,000. 2020 beginning balance 150,000 less depreciation 600,000. Balance cost 150,000. 2021 150,000 is the opening balance of the cost less depreciation 150,000. Net cost 0. 3. Sum of digits method. Name of asset 2016, 2017, 2018, 2019 and 2020. Machinery cost 3.3 million. Machinery residual value 300,000. Net cost 3 million. Rate of depreciation. Note 1. Note 1. Useful life of machine 5 years. Sum of digits is equal to 1 plus 2 plus 3 plus 4 plus 5 is equal to 15. Rate of depreciation year 1 is equal to 5 by 15. Year 2 is equal to 4 by 15. Year 3 is equal to 3 by 15. Year 4 is equal to 2 by 15. Year 5 is equal to 1 by 15. So depreciation for 2016 is equal to 1 million. Depreciation balance cost 2 million. 2017 opening balance 2 million. Rate of depreciation at 4 by 15 is equal to 800,000. Balance cost 1.2 million. 2018 opening balance of machinery 1.2 million. Rate of depreciation 3 by 15 600,000. Balance cost 600,000. 2019 600,000 is the beginning balance. Rate of depreciation 2 by 15. Depreciation amount is equal to 400,000. Net cost balance cost is equal to 200,000. 2020 opening balance of the machinery cost 200,000. 1 by 15 of 3 million is 200,000. So balance nil. 4. Double declining balance method. Name of asset 2016, 2017, 2018, 2019 and 2020. Machinery cost 3.3 million. Machinery residual value 300,000. Net cost 3 million. Depreciation at 20% on net cost 600,000. Balance cost 2.4 million. 2017 beginning balance 2.4 million. Depreciation at 20% on the net 2.4 million is 720,000. Balance cost 1,680,000. 2018 beginning balance 1,680,000. Depreciation at 20% of 1,680,000 is equal to 504,000. Net cost 1,176,000. 2019 beginning balance 1,176,000. Depreciation at 20% on 1,176,000 is equal to 352,800. Balance cost 823,200. In the beginning of 2020, the machinery cost is equal to 823,200. Depreciation 20% of 823,200. 246,960. Balance cost is 576,240, and it will continue further in the same pattern. 550% declining balance method. Name of asset 2016, 2017, 2018, 2019, 2020. Machinery cost 3.3 million. Machinery residual value 300,000. Net cost 3 million. Rate of depreciation as per note number 2. Note number 2. Useful life of machine 5 years. Rate of depreciation cost by 5 into 150%. Cost by 4 into 150%. Cost by 3 into 150%. Cost by 2 into 150%. Cost by 1 into 150%. So the rate of depreciation comes 2016 900,000. For 2017 630,000. 218 441,000. 219 308,700. 2020 216,990. The balance at the end of the year 2016 is 2.1 million. Year 2017 is 1,470,000. Year 2018 is 1,029,000. Year 2019 is 720,300. Year 2020 is equal to 504,210. Recap. Thanks for watching. Please subscribe to our YouTube channel Accounts Lobby for various solved problems and lectures on accountancy.